In the past, you've said, your words, climate change is an emerging risk to financial institutions, the financial system, and the economy, end quote. Will Chair Powell, will the Fed follow the FSOC report's recommendations, including implementing climate stress tests for the biggest banks?
We are looking at climate stress tests. I think it's very likely that climate stress scenarios, as we like to call them, will be a key tool going forward. I would stress that those are very different from the regular stress tests which affect capital. Climate stress scenarios at this stage are really about assuring that the large financial institutions understand all of the risks that they're taking, including the risks that may be inherent in their business model regarding climate change over time.
Will you make this a top priority if confirmed to another term?
Yes, it will be. I would say within supervision, as I mentioned, that is likely to be a very important priority over the coming years. The economy no longer needs or wants the very highly accommodative policies that we've had in place to deal with the pandemic and the aftermath.
In testimony before the U.S. Senate Banking Committee, Federal Reserve Chair Jerome Powell said on Tuesday that the massive stimulus the central bank has been providing was no longer needed.
The economy's in a completely different place.
As the Fed shifts to focus on fighting inflation and plans to raise interest rates and decrease its balance sheet in 2022.
We're really just going to be moving over the course of this year to a policy that is closer to normal, but it's a long road to normal from where we are. Right now we are very highly accommodative, and it is really time for us to begin to move away from those emergency pandemic settings to a more normal level.
Powell also said he expected the country to power through the latest surge in coronavirus cases, and that any impact on the economy likely will not derail the Fed's plans to tighten monetary policy.
I expect the economy to continue to be able to deal with these outbreaks. I think it is likely, though, if the experts are right and Omicron is going to go through really quickly and peak perhaps within a month and then come down after that, I think it's likely you will see lower hiring and perhaps a pause in growth and that kind of thing. But it should be short-lived.
Powell told the lawmakers who appeared to be leaning towards endorsing him for a second four-year term that rather than guarding against a pandemic-related downturn or promoting more job growth, it was now inflation that needed to be the focus.
Sometimes that's maximum employment, sometimes it's inflation. I'd say now it's inflation.
Inflation was top of mind for the senators during the hearing, and Powell told them he now thinks inflation will ease by the middle of the year, but that the Fed stood ready to do what was needed. U.S. stocks, which have started the year on a weak note, edged up during Powell's testimony, with energy and tech stocks posting the biggest gains.
A COVID-19 vaccine mandate seems to be working at United Airlines. According to the company's CEO, Scott Kirby, on Tuesday, while 3,000 airline employees have tested positive for COVID-19, none who were vaccinated have died or been recently hospitalized due to the disease. Chicago-based United was the first U.S. carrier to mandate vaccines for its employees in order to facilitate travel and flight operations. Airlines have had to cancel thousands of flights since late December, when the surge in Omicron cases and winter weather began impacting schedules. According to Kirby, before United's vaccine requirements were put in place, more than one United employee on average per week were dying from COVID. But the company has now gone 8 straight weeks with 0 COVID-related deaths among vaccinated employees. Last month, Kirby defended the airline's vaccine mandate decision in the face of Republican criticism.
Why is United's conduct disregarding the rights of your employees so different from the conduct of your competitor airlines, which are protecting the rights of their pilots and flight attendants and not firing them or putting them on unpaid leave for exercising their religious liberty rights?
I'm happy to talk also about the rationale for why we did it. We did it for safety.
Kirby said last month about 200 employees did not comply with United's mandate and were fired out of its 67,000 employees. Rival American Airlines said on Friday that more than 96% of its employees have submitted proof of COVID-19 vaccination or a request for an accommodation.
No holiday cheer at some leading American retailers. They're issuing warnings ahead of earnings season, and they're pointing the finger at the Omicron variant. American Eagle Outfitters signaled Tuesday that supply chain snarls and disruptions caused by the surge of infections hampered its revenue growth. The apparel chain lowered its forecast for top-line growth in the holiday quarter. Also on Tuesday, its rival Abercrombie & Fitch said it lost sales during the holiday season because it lacked inventory to keep pace with customer demand, while Urban Outfitters said its stores saw lower traffic in November and December. The renewed surge in COVID-19 cases forced some retailers to cut operating hours during the busiest shopping period of the year. It also led to shortages in staffing and inventory. On Monday, Lululemon said just that. Omicron forced the yoga pants maker to cut staff and store hours, denting its holiday performance. A&F, however, voiced some optimism, noting that now that its inventory has improved, sales have accelerated in the post-holiday period, sending its shares higher in early trading Tuesday. Big-name tech and energy stocks spearheaded a rebound on Wall Street Tuesday, helping the S&P 500 snap a 5-day losing streak. Investors took relief in Federal Reserve Chair Jerome Powell's testimony on Capitol Hill, where he said the economy was ready for the start of tighter monetary policy as the Fed shifts its focus to fighting inflation. O'Neill Global Advisors Senior Portfolio Manager Randy Watts said Wall Street liked what it heard.
I think the markets are relieved that the Fed is taking inflation more seriously. I think the market believes the Fed is a little bit behind the curve. I am personally hopeful that some of the supply chain issues that hurt the economy last year are going to start to ease up in the first half of this year.
The Dow gained 0.5%. The S&P 500 rose nearly 1%, and the Nasdaq shot up 1.4%. Among the S&P's top gainers, Las Vegas Sands, up nearly 7%. J.P. Morgan upgraded the stock of the casino operator to overweight. Shares of Moderna fell more than 5%. The World Health Organization said more research is needed to determine if existing COVID-19 vaccines offer adequate protection against the Omicron variant. Inflation-obsessed investors will closely eye the Consumer Price Index that comes out Wednesday. Economists expect an annualized rate of 7% in December, which would be well above the Fed's target.